Thanks so much for tuning in. We're at an event organized by Aditya Birla Sun Life AMC, and I'm in conversation with the management, A. Bala, as well as Mahesh Patil speaking to me. We've been discussing the outlook for 2023, so I'll start with you, Mr. A. Bala. Can you tell us what the overarching theme is going to be in the new year?
I think 2023, in our own belief, is it's going to be a consolidating year, given the fact that last 2 years, I think we've done exceedingly well from the market point of view. But in the economic point of view, we see a significant revival in the economic growth, and government has been focusing more on investment-led growth has to stay, and government has been the biggest spender in driving the economic growth. We believe in the 2023, government spending will continue to drive the growth. And the buoyancy that you have seen in the tax buoyancy should also give them enough leg room for the government to continue to spend more in terms of driving the growth. But having said that, I think the global pressure which was there, especially on high inflation, as well as on high oil prices, which is energy prices going up, and globally that had its own impact in the global market. But India, of course, maintains a bit of safe position as far as this is concerned. But at the same time, Indian interest rates also have got hiked, given the fact that the pressure of interest rate differential also is actually coming in the way of keeping the interest rates low. And that being the case, we believe that this year we may see interest rate hike cycle getting picked out, and therefore the overall lending growth which is now currently picking up should also get enough support from a stable interest rate environment point of view.
Okay.
Broadly, we believe the buoyancy, I think we should continue the year 2023.
Interesting. I want to specifically talk about the equity space as well, Mahesh. We had an outperformance here in 2022. If you look at most of the equity markets globally, I don't think that was expected at the start. Correct me if I'm wrong.
Yeah.
Will that outperformance continue in 2023?
So it's very difficult to say how India will do relative to the other markets, because it all depends on how because other markets do, right?
Yeah.
So because we've seen a deep correction in some of the markets, especially some of these Asian markets, right? And we're seeing kind of a rebound over there. So relative terms, I think at least we believe that India in absolute terms, right, should still do reasonably well. I mean, we don't expect very high returns this year, because this year is a period where you're seeing rates remaining higher, liquidity slightly tight. So the valuations will probably normalize, right? So if you look at our multiples, right, for the broader market, it's slightly above the long-term average. However, I think we are still fairly bullish on the earnings growth trajectory, because we are not seeing any major downgrade to that earnings. We don't see any major impact, despite the fact that global economy is going to grow through a recession, especially US, Europe, and there are major downgrades over there. But we are still expecting earnings growth to be around 14-15% CAGR in that range. So even if you assume some kind of a normalization in the valuation multiples, right, which are around, say, 5 to 7% expensive, I think market returns should still be in the high single digits, which is a fairly decent outcome in the current scenario, where there is a lot of concerns globally in terms of how is going to be the economy, where is it going to land. So that's the broad outlook. I think moderate returns, but long-term outlook still remains very decent for equity, because we see India structurally getting in a phase of kind of a growth rate which will be around 6.5-7% for a longer period of time.
In that context, and I'll come back to you on asset allocation in just a bit to close this conversation on equity. In that context, when there is a challenging global environment and there are pockets of strength, what specifically are those pockets of strength in the earnings picture that you will look at in 2023?
So obviously, I think it will be more sectors which are driven by the domestic economy, right? So within that, we think banking and financials, right, should see a good growth, because credit growth is now in the mid-teens, and we think it will probably sustain around there. Margins, NIMs have also improved, and I think they will be fairly stable. And overall NPAs, right, should be very, very low, because we are seeing the corporate balance sheets very strong. I mean, a lot of corporates have delivered, and we're not seeing any major stress over there. So that looks to be a sector which should see a reasonable good growth. Besides that, sectors, consumption sector, the consumer companies are likely to see, they've seen a growth pick up slowly. Rural economy, which has been weak for the last 1 year, is showing initial signs of recovery. And with now the Rabi season being fairly strong and rural wages moving up, I think there should be a pickup. And again, in this budget, I think the focus will be on rural India, right, to get the consumption back before the next elections. So consumption and even like sectors like auto, for example, consumer discretionary, where I think the overall volumes picking up, margin improvement, because I think this year probably you will see the benefit of a lot of sectors where the commodity deflation, which has happened in metals and other oil and gas, should benefit in terms of margin improvement. So that's another sector, okay, which where we see decent growth. Other sectors like capital goods and fraud also exhibiting reasonably good growth on the back of the improvement in the capex. Though it's still early days, but we expect that to improve as we move forward.
Okay. To close things out, Bala, obviously diversification key strategy for all retail investors to focus on. But would you say that now more than in the recent times, the options available or the asset or the potential in the assets outside of equity is significant, and therefore you should definitely look at that diversification as a key strategy in 2023?
Yeah, definitely. I think if you more from a look at from a year point of view,
Yeah.
It makes logical sense to look at other asset class other than equity, like fixed income asset class, given the fact earnings yields versus fixed income return that if you look at, there is a gap of almost about 3-4%. Therefore, the fixed income and asset class become a little superior to equity as we move into the 2023. At the same time, gold as an asset class, as silver as an asset class, also could gain some kind of traction this year, given the fact that with an expectation of a dollar becoming weaker compared to other currencies, therefore some amount of movement could happen there as well. Therefore, from an investor's point of view, clearly, while equity will continue to remain a longer term asset class, equity cannot actually take a call on the basis of 1 year outlook.
Sure.
You have to take a longer term outlook. At the same time, if you have to take a little bit of differentiated call, I think asset allocation fund which invest in all the three asset classes could be one. And those who are underweight or those who never invested in fixed income, especially in the people who have parked a lot of their money actually in the fixed deposits, even they may also consider mutual fund fixed income scheme as one of the alternate, given the fact the rates are today more attractive than what you have seen about 2-3 years back. At the same time, the other view we have that current higher interest rate regime is not going to be immediately taking the path of downward path. I think it's going to stay where they are today, at least for about a year or so.
Okay.
And therefore, they also provide a greater experience to the investors, those who are coming in now. But not to forget the fact that equity is something should be considered for long-term investing. But this asset allocation comes actually part of the de-risking your portfolio from the current environment.
I think we've given our viewers very interesting insights, not just on the equity space and just like what Bala was talking about, the asset allocation strategy that will hold you in good stead in not just the new year, but in the years to come. Thanks so much for tuning in. Do stay tuned.